Greetings, fellow traders. I'm Dylan, a research strategist at Pepperstone, presenting the latest weekly update on As Good As Gold. Over the past week, gold has been steadily climbing, and even though bulls have been pushing for new highs, the momentum just isn't there yet. Three major factors like Fed rate cuts, central bank gold purchases, and geopolitical risk are still supporting gold. However, we are still waiting for that big news event that could really shake things up. In my view, next Friday's U.S. non-farm payrolls report is likely the most significant event in the short term that could provide a strong directional push for gold. As usual, I'll start today's video with a quick technical analysis of the gold against US dollar performance over the past week and, some reasons behind. And I do want to spend more time discussing how the upcoming data might influence gold's price movement. So let's dive in. Looking at the daily chart, we saw gold drop 1.1% last Thursday, falling back to the $24.80 level. But the bulls managed to recover all the losses the following day, confirming the uptrend. And here, actually, you can clearly see the uptrend line since April, highlighted in orange on the chart. This line is a major resistance level for further price gains. For buyers to unlock more upside potential, they'll need to break through that orange trend line. While on the downside, the $24.80 level, the lower edge of the rising wedge pattern since late February, and the 50-day moving average might offer some support. As we've discussed in previous videos, the three key drivers supporting gold's price over the medium to long term haven't really changed, including expectations for Fed rate cuts, central bank gold purchases, US election risk, and some geopolitical tensions. These factors continue to keep gold at elevated levels. And in my view, the most notable news last week was Powell's speech at the Jackson Hole Symposium, where he clearly hinted a rate cut in September. He mentioned that the Fed's fight against inflation is nearly done, and there's an urgent need to shift to a neutral stance without further cooling the labor market. This very dovish stance pushed the yield of two-year U.S. Treasuries below 3.9%, while the dollar index edged closer to the 100 mark, lowering the opportunity cost of holding gold and driving prices higher. So all in all, gold bulls do have the upper hand for now, but there's quite limited room for further gains. As I mentioned earlier, the factors supporting these arguments and also the related data have been repeatedly priced into the market, and some short-term developments might not be enough to inject any new momentum into gold's price. With bullish factors still in play, the big question remains, under what conditions could gold make a run at $2,600, or I would say at least break through the overhead resistance? Well, given that the Fed has shifted its focus from controlling inflation to monitoring the labor market, I believe that this Friday's core PCE release will have a relatively limited impact on gold prices. The market expects core inflation to tick up slightly to 2.7% year-on-year compared to last month. If the actual figure deviates from this by less than 0.2 percentage points either way, I don't really think it will alter the fast path toward rate cuts. As a result, any pullbacks in gold are likely to find support around $24.80, with bulls struggling to gain enough momentum. Personally, I think gold will likely remain range-bound in the short term. Well, from my personal perspective, the non-farm payrolls report on September 6 is the most important risk event before the next Fed meeting. As you can see here, it's still a little bit too early to get any accurate forecast from the economists. However, considering that last week, the U.S. Bureau of Labor Statistics revised down employment growth for the year ending March 2024 by a whopping 818,000, sparking some market jitters already. I believe that if the labor data continues to disappoint, for example, if August new jobs added is below 130,000 and the unemployment rate holds steady at 4.3%, the odds of a 50 basis point rate cut in September will increase significantly. This, in my opinion, could be the best shot for gold to make a serious push towards $2,600 ahead of the next FOMC meeting. So that's pretty much for today. If you have any ideas on how the upcoming US economic data might impact gold trading, drop a comment below and let's discuss. Stay tuned with Pepperstone for more insights and updates. And until then, happy trading!